Yeah, it's been good.
This meeting is being
Everything been good
recorded.
with you too?
Yes, just trying to tidy up loose ends before the end of the year.
Yeah.
Finish up some tax planning, and we got a few new people and a few new team members for onboarding. And what else are we doing? I don't know. Re-upping clients for next year, and yeah,
Yeah.
it's been busy, but
Have you been expanding your headcount too?
yeah, we probably have. We brought on three new people this month, which makes it sound like we're bringing on three new people every month. We are not. Um, but maybe we're at about 15 right now.
Nice. That's great.
Yeah,
Good for
yeah.
you. Well, yeah, hopefully this stuff continues to, I mean, we definitely I owe you a catch up. Like we should do something separate from here.
Yeah, yeah, yeah. We'll hit
Because
you up in January.
yeah, let's do something when I know this is busy time of year for you. So, um, when things calm down, let's get together. But I'll let you two run with this.
Yeah.
And I gotta jump at the 10 o'clock. So I'll just you know the community, you know the vibe. I'll let you all introduce yourselves
We'd
and
be
run with it.
happy to. Yeah,
Cool.
feel free to jump off. We've already got Alicia joining us, so yeah, you're welcome to hop
Amazing.
off.
All right. And hey, Sarah, good to see you again.
I think that's just her note taker for now.
Oh,
She'll be here in a second though.
well, her note taker took the note, and then she'll get
There we go. Perfect.
All
Thanks,
right. I'll see
Ryan.
you. Bye, Allison. I'm gonna assign you as the host too.
Oh, okay, perfect. Perfect. I will do my best with my responsibilities. Hey, Alicia. Hey, Daniel.
Hey, how are you?
Good. How's it going?
Hey, how's it going?
Just thinking that it's November, but realizing it's the middle of December, you know.
Right? Right? As they say, the days are long and the years are short.
I hear the older I get, the slower the years become, though. Tell me that's true. Tell me that's true. You're not experiencing that either? Damn it.
Let's see. Sarah, right as you were hopping on, Brian was hopping off. So I believe I have host privileges. Let's hope I don't,
Ooh,
I don't inadvertently do something I shouldn't. But
sounds like you get to be
I'll
the
try
adult.
to do what?
Sounds like you get to be the adult.
Oh, we're all in trouble. Okay. Oh, I guess that means I need to let people in, or can they? I'll check and see if they can automatically come in, but I don't think so. I'm not sure if there's a waiting room, but I'll take a look. I also wonder how many people will actually show up because this is the sort of thing you sign up for, and then you realize it's Friday and you think, do I?
That's what I was thinking.
I've been looking forward to this all week. It's probably the most exciting part of my week.
Oh my gosh,
That's
I
a
love
lie.
it.
Bold-faced lie. Bold-faced lie. Absolutely. This
Ah,
is this is this is a necessity, is what this is.
let's see. All right. Looks like Tracy's here. Okay, I think people can come in on their own, but I'll still try to monitor the participants and just make sure nobody looks to be stuck. Hello, Tracy. Hello, Erica.
Hello.
Let's see. I think we give folks maybe a couple minutes, Sarah, and then we can
Okay.
start yakking. Sarah's the talker, so she's gonna, if you couldn't tell.
Except on Fridays.
I, okay, I think we can go ahead and get started. As folks come in, oh, there's Paul. Hello, Paul. Y'all are welcome to stay off video if it's one of those days. Do your thing. Stay on mute or come off mute. We've done this a few times with Hey Council. Hello, Courtney. And it's very much come as you are, and it's really more Q&A. If there's something we can workshop, we absolutely will. We don't have any kind of formal presentation prepared, although, as Sarah will tell you, I can talk ad nauseum, especially when it comes to topics I'm passionate about, like tax and accounting. But my name is Allison McLeod. My business partner, Sarah Harris. We are the co-owners, co-founders of Agate CPA. We work with a lot of law firms and attorneys in a variety of practice areas all over the country, different size firms from solo to 8 figures a year in revenue. We do a variety of things, more interesting things, trying to work on building an app for some partner compensation models. Didn't know we were coders, but here we are. And but we do a lot of just day-to-day accounting, make sure your books are clean, do tax strategy, see if we can get you paying a little bit less taxes, and whether we can or not, we do some tax return preparation as well. So uh, we find on these get-togethers, hey Maggie, welcome, that y'all have lots and lots of questions. So if anybody would like to hop in, any kind of accounting question, tax question, we're also financial planners. We'll try to answer, we'll try to answer anything. We probably won't give you specific advice for your specific situation, but every now and then we do. So if anybody would like to hop in with any questions. This never happens, Sarah.
Hey, Allison, I'm happy to hop in and ask it. It's a really general question.
Yeah.
So this is my first year as a solo. I've just launched in June, and I've got a mix. Thank you very much. So I have a mix of W-2 and self-employment income. And I guess just as a general question, I would say if you have any like top three like traps or pitfalls or things that you see people doing wrong. Um, that may not be obvious to someone that's never been an entrepreneur before. I would love any like best practices that you could think of. Like this is something most people get wrong on the like for their first year.
Okay. This is a really good question, Tracy, and don't be concerned that it's too remedial. I will say, and I probably should have already said this, is when we have these get-togethers, we hear commonalities all the time. So, like, there's definitely some recurring themes that are happening here, and best practices is definitely one of those. Are you asking, Tracy, just about this year in particular? Or are you thinking like foundational things to set you up for success, like for the next several years?
I suppose I'm thinking more just a thing that that lawyers, as notoriously not great business people, may not have top of mind, like when they set out, right?
Yeah. So I guess a few things I will say is one thing is, especially if you have co-owners, but even if you don't, make sure you have good formation documents. Certainly, if you're not in corporate law or tax law, you have a buddy who is. So make sure you get those done quick, and get those done well and executed. Second thing would be you'll find a way to track your revenue and expenses, what you're bringing in. If you're billing, do you bill by the hour, Tracy? Flat fee? What do you do?
I do both. Yeah, I have a mix.
What's your practice area?
So I'm straddling right now corporate and also probate and estate planning.
Oh, okay. Okay, great. So you can do your own formation documents.
Yeah.
Lovely. Okay, great. If you choose to. Yeah, so what I would say there is, find a way to keep track of, like, if you are billing time, like for probate, for example, or if you have some hourly corporate clients, make sure you have a way to track all that that works well for you. A lot of people use like a true practice management platform like a Clio, Practice Panther, Smokeball, something like that. We would definitely recommend that. I think some folks are like, well, I'm just new, I'm starting out, I don't know if I necessarily need all that. I think it's nice to go ahead and get in that habit of using a more sophisticated tracker, unless you just like really don't need it. Like we have some clients that are like fractional general counsel. They have 3 or 4 clients that pay them a fixed fee every month. They just really don't feel like they need a practice management platform. But if you're going to have, like, especially on the estate planning side, if you're doing like wills and trusts, et cetera, for, maybe an individual or family, and you have a couple new clients a week, you want a good way to track all that. Especially if you're probably keeping funds in your IOLTA. And a true practice management platform would really help with that. So that's another thing that we see folks kind of either try to skimp on or maybe push off for a while. But we see folks be like that install those and really run with those, be successful. And then as the firm grows, if it grows, then you've already got that one piece of it knocked out. So practice management platform, formation documents, make sure you have a good accounting system. Again, it's really going to depend on the volume, but I would think for you, Tracy, your volume will be, as far as transactions, like number of clients, number of matters, number of cases, the expenses that you're tracking, especially again, to the extent that you have trust accounting involved. So we would advise using, an actual accounting package. We use QuickBooks for our clients. QuickBooks is very popular. We don't love it, but it's very popular, and so we use it, but there are certainly other packages out there too. That's definitely one of those things. Like if you're, on the tax side, if you're asking somebody to help you, tax advisor, manage your tax situation, they can't do it without understanding like what you brought in, what you spent, what your profit is. And that's really hard to track without a good accounting system. So that would be the third thing that we would suggest is get an accounting system. The fourth thing that we would suggest, and because you're attorneys, you love to overcomplicate things, and so you will try to grab an S corporation before you need it. You might have another entity before you need it. But I would say in your first year, especially coming off of a W-2 in that first year, keep it simple. Again, it depends on what state you're in. Different states require different things. But if you can avoid an S corporation that initial year, that's usually the best way to do it. And then just kind of see where things go and if something like that makes sense for you later. So that might have been more than you were asking for, Tracy. I don't know if anything there is helpful.
It's very helpful. Thank you very much. It's been validating and illuminating. So I appreciate
Oh,
that.
I like those words. Okay, great. Any follow-up questions, Tracy?
Not right now. I think I'll lurk and let the more experienced folks chime in.
Sure, sure. Courtney, you came off mute. You want to? Yeah, go for it.
I do. I have a follow-up question to Tracy's. I'm even less experienced. It's just me. I went out on my own about 5 months ago.
Congratulations.
Thank you. In terms of tracking business expenses, when we submit those, I don't even know, do we need to submit full receipts, or I just kind of have a list of, I'm keeping track, but I haven't printed out receipts or anything like that. I mean, how specific do we need to be?
Yeah, that's a good question. So you ideally you keep receipts for everything. Ideally.
Uh-huh.
Definitely keep receipts for anything that the IRS deems as subject to bad actions, like travel, meals, anything that feels like it has a quote unquote personal element to it. You
Okay.
definitely want something to substantiate that. Your mileage, if you are driving, like if you're in criminal defense and you're driving back and forth to the court, or an estate planner, you're driving back and forth to probate court or something like that. You want to keep good track of your mileage. Keep a mileage log. That's kind of the equivalent of a receipt for miles. Um, Generally, your credit card statement or your bank statement would be sufficient.
Okay.
Other than those few key areas where there's just like possibly some abuse because there's some personal use overlap. Um, but I would still say just keep as many receipts as you can because they could be useful. If you use an accounting platform like QuickBooks, you can actually attach the receipt in QuickBooks. Sometimes if you use like a software like Ramp, or sometimes even some of these neobanks will allow for receipt attachment. So, but have some way to kind of keep up with that on the back end. Especially
Okay.
now, especially if you end up having someone come work with you, an assistant, an employee, a counsel, something like that, you want them to keep their receipts for sure. Because if you reimburse them for that, for example, that's how you substantiate your tax deduction is their receipt. Does that
Okay.
help, Courtney?
Yeah, that helps. And it's something that I will definitely start doing moving forward. But for this year, if I mean, it will be, I have a way of going back to get receipts for everything. Is that something that is, I should have more for auditing purposes, or do I actually need to submit those receipts to the IRS?
Oh, good question. You don't need to send anything to the IRS. They wouldn't know what to do with them, but they don't know what to do with anything anyway. Well, you probably don't even need to submit them to your CPA or tax advisor or whoever you work with for tax prep. Like we don't typically ask to see our clients' receipts. Every once in a while we will, depending on what it is. We just want to know that they're keeping them in case they do have an IRS exam, or in case just internally you have questions and you want to come back to them.
Okay.
Can I
all
just
right.
jump in? Can I jump in for 2
Yeah,
secs?
Erica.
Yeah.
Hey,
Hi, Erica.
hi, Courtney. So Courtney, I'll just tell you that I know that maybe QuickBooks isn't beloved by the accountants, but I love it. And the receipt function is super easy on your phone. Like if you have a meal with a client or whatever, you just take a snap of it and it automatically uploads it and extracts the information, and it's easy peasy. So for whatever that's worth. And it also does mileage too, if you're just even driving to that meal. Which yeah, I've loved QuickBooks.
Okay, thank you. That's super helpful.
And do you mind, can I actually follow up with a question about the S election? I know you said that basically you don't, or it's advantageous to try to avoid it in your first year, which is what I did. I'm now in year 2. Can you talk a little bit about at what point it makes sense to do an S election, and then if it does make sense, what the time frames are during which one can make it?
Okay. Yeah, let's talk about the timing because that's a little bit of quicker. Yeah, these are good questions, Erica. So typically you're going to file request as corporation election status with the IRS. You actually do, it is a tax election. So unlike LLC, LLP, corporation, these are all state law formations. The S corporation is a federal tax election, and you request this with the IRS. I say request. The IRS is likely not going to disallow. It's probably just going to go, okay, sure, sounds great. The IRS loves S corps, and thank goodness. That at least one thing's easy with them. But you would request this by March 15th of the year you want to be an S corporation. So if you want to be an S corporation starting 2026, you would request by March 15th, 2026. Did you miss that? No big deal, because again, the IRS loves their S corporations for whatever reason, and they give you I think it's 5-year window, Sarah. I think it's I think it's 16 months. Maybe I'm wrong on that, but maybe it's less than that. But there's a lengthy window, and so we often are making S corporation elections that are late. I say often. When we do them, they are sometimes late. I should say it that way. And that's not a problem either. So sometimes we'll wait, like let's say 2026 is the year in question. We'll wait till June, July, August and kind of just see if it makes sense then. If it does, then we'll just make a late election backdated to January 1st, 2026. What you don't want to do is cross years, because you need to give yourself a salary when you're an S corporation. And now you need payroll, W-2, payroll taxes, and you want all of that to be done timely. You don't want to be in 2027 and making a late S election for 2026, and now you file a late W-2 for yourself. You're paying late payroll taxes, like expensive. So the S corporation made late is not a problem. It's the implications that go along with it. So as long as it's done during the year, year of, then we don't usually see a problem.
Okay, so just to be incredibly blunt about it, so could you make, or do you advise making an S election now for 2025, or do you think, I mean, because I know there's the whole sort of self-employment tax comparison here. So there's like the payroll piece and then the self-employment tax piece. What do you recommend for this year?
No, that's a really good question. From a technical perspective, is it too late? No. You go to the IRS, you file your late S corporation election. I'm looking over here at the date, December 12th. Yeah. So December 12th, they'll approve it back to January 1st. Like we've never had a problem with that. I can't guarantee it, but we've never had a problem with it.
Mhm.
I've never heard of that being a problem. You would need to go ahead and decide on your salary and you need to run that through payroll. Can you run a December only payroll for the whole year? 100% you can. As long as you can cash flow it, you don't have an issue. And if you can't cash flow it, you probably don't need to be an S corporation. So as long as you can cash flow the payroll taxes, if you have maybe say a solo 401k, you want to make sure you make the employee contribution before the end of the year because that needs to be reported on your W-2. So all that has to happen very quickly. Like if you don't have a payroll service, you have to get one pretty quick and get all. Yeah. But you can. And then Erica, the original part of your question was, okay, so when does it make sense for somebody to establish an S corporation? I haven't looked at this in a while, but I dropped a PDF in the chat if anybody is interested. Sarah and I put together this guide. I don't know. It's been less than a year ago now. I think we talk a little bit about S corporations. Oh, we sure do. Oh, we have a whole chart. We have a whole chart about tax structure. There's a lot here, actually. Um, but I would say, it is profit. So some of it is profit. You higher the better. Volatility is an issue. So like depending on your practice area, if you're gonna see like big swings, because like I don't know, you're in PI or something like that, like be careful with that because you may have some low years where you're running this S corporation, it doesn't make sense. Ownership matters. S corporations don't really scale. So if you're trying to, get you and your five best friends in this, new firm, you probably want a partnership, not just partnership for entity, but for legal entity, but be taxed as a partnership. You probably don't want to be taxed as an S corporation. You're not going to easily be able to give yourselves pay based on compensation while still also getting the benefits of the self-employment tax savings of an S corp. If you're looking to like be acquired by you're in Utah or Arizona and you're looking to like have non-law legal investment or something like that, S corporations don't look very good. If your time horizon is really short, you're like, I just launched my firm, but I'm only going to do this for these 3 or 4 years where my kids are at this age or whatever it is, and then I'm going to go do something else, or this is how I semi-retire or whatever. As corporations are expensive to run. You need to keep a clean set of books. They need their own tax return. You got to file for the S corporation election one time. You've got ongoing payroll. There's probably a few $1,000s a year of administrative cost to running the S corporation. So you want to make sure that it's overall a good fit. Probably its own discussion, and everybody's so different. I talked to a prospective client the other day who like S corporation, and we were like everything is going great. I was like, gosh, y'all have great profit, and it looks like you're gonna like knock it out of the park. And then they said, and we're gonna take on some investors. I was like, oh, okay, okay, no. No, this doesn't work for you. So everybody is unique, but those are some of the factors that go into it. I don't know. Is that helpful at all, Erica?
Yeah, that's perfect. Thank you.
Good question. Everyone always asks about tax structure and S corps. Anyone else have any other questions or thoughts?
I have another question, but I don't want to go if I know there's other people on the call.
Ask
Courtney,
away,
why don't
'cause I got all the same questions you do. Keep going. Keep going.
Okay, well, I did notice that you have on the PDF, you're talking about estimated taxes. And that's something totally new to me. I've been paying them. I have no idea if I'm paying the right amount. I mean, especially since I haven't even had like a full year yet. I really don't know. So I'd love to kind of hear your thoughts on
Courtney?
those.
Yeah. Courtney, what state are you in?
Georgia.
Ah, me too. Lovely.
Oh, really?
Yes. I'm in Marietta. Where are you?
Okay, I'm in North Buckhead.
Oh, very nice. So Georgia is a low tax state. We're like 4 or 5%. And then you've got federal to consider. So what we typically say is that first year, even honestly could be the second year, your income might depends on really how you launch and what you're doing. Your income might be somewhat volatile, like might just be hard to predict. Um, so we usually say just set aside maybe a third or so
Okay.
for taxes. Like if you told me you're in California, I'd bump that up a little bit, or New York, I'd bump that up a little bit. But for
No, I
Georgia,
like that. I've been doing 50% just to be safe.
you know
Okay,
what?
good.
Stay liquid, put it in a high yield savings account. Make sure that it's not just sitting somewhere not earning anything at all. But I think that's fine. Like if you want to set
Okay.
aside that much and just it makes you feel good, what you'll do is when you file your tax returns, presumably in April, but when you file them, you can do that true up and you can say, wow, I was really, really setting aside way too much. I don't need to do that. And you can bump down from there.
Okay.
50 does feel high. But I mean, if you're on that course and it's been okay and you've been able to cash flow it, I just do that until you file your tax return. And then you can see maybe I can bump it down to 40, maybe I can bump it down to 35, something like that.
Okay.
That's usually what we tell folks that first year because it's really hard. It can be really hard to chase after actual numbers. Now,
Mhm.
as your firm matures and cash flow client activity becomes more predictable, what we're typically doing with clients is doing some tax strategy sessions during the year and looking at their financial activity, making some guesses about the rest of the year, putting that into a tax scenario and saying, okay, like if we everything we guessed at, everything we know, if we were going to file your tax return today, like how much money would you owe? And then reverse engineer, okay, do we want us to be setting aside, make estimated payments? And so we try to narrow that a little bit more, well, a lot more, but that's hard to do that first year or two.
Okay. Thank you.
Yeah, yeah. Maggie, I think you came off mute. Did you have a question?
I did. I'm just out of curiosity. Could you go back to the QuickBooks issue a little bit? I'd love to know what you don't like about it, what clients do like about it, because I'm looking to implement something. So pros and cons, and maybe your, two or three that you do really, really like would be wonderful.
Yeah, yeah. I think that's a great question. I'm glad you asked it, Maggie. Us just giving an opinion doesn't really give you much help. Um, what we don't like is at this point, it's a very bloated platform. There are tons and tons of features, and anybody on this call needs 7 or 8 of them. You really don't need a lot of the features, and they create a lot of noise. They create a lot of noise for you as you go into QuickBooks to try to do, just record a bill or something like that, or reconcile your bank account. It's just a lot to have to look at when all you want is just a few features. I don't really appreciate how they continue to gatekeep fairly basic functions at higher pricing tiers. For example, if you're running multiple practice areas in your firm, which several of our clients, many of our clients are, um, QuickBooks has a feature that will allow you to track the revenue and expenses related to your different practice areas, but that feature is gatekept at a higher pricing tier for no reason. Additional users gatekept at a pricing tier for no reason. So we find that it just becomes more expensive as your business grows and you can absorb it, but it's obnoxious and unnecessary. Um, One thing we really, really hate, and a lot of people do this, is QuickBooks for invoicing. It does have an invoicing slash accounts receivable function. And it is very, yeah, the solopreneur. I don't hate that one actually. Um, I the AR invoicing feature is very robust. It will do a lot, but it will mess up easily, and you really have to chase after it a lot. And we find as the accountants coming in trying to just reconcile a bank statement, we often have to defer to whoever is running invoicing in QuickBooks and make sure everything matches up well before we can get in and do our job. So there's more reasons we don't like it, but it just tends to not be small business friendly because of pricing and just unlimited features that you don't really need. Um, what we do like about it, the reporting is great. The reporting runs really well. I will absolutely talk about Clio accounting. The reporting is good in QuickBooks. It's very strong. It will give you a good balance sheet P&L. Depending on how much information you add to it, it will do well with the reporting. It's pretty accurate. Like you're not going to find too many weird things. Um, if you put a transaction in, it's there. Typically has a good audit trail, which is important. Um, and everybody uses it. It's sort of like LinkedIn, right? If you could go to other sites and professionally network, but LinkedIn works so well because the crowd is there. And it's the same way with QuickBooks. If you have an accounting platform, and this may speak a little bit to Clio accounting, but if you have an accounting platform no one's ever heard of and you need help with it, you're really on your own for that. So using QuickBooks is nice because your odds greatly expand to who can help you. Clio, before I go on to Clio, Maggie, does that help at all?
Yeah, it really does. It's really interesting that you said that because one of the things that has kept me out of QuickBooks, the time or two I've looked at it, I'm like, whoa, that is so expensive, and I don't even need all of this. Like, I'm just a
Yeah.
very, basic. Like, I do the what you mentioned around the fractional GC, three or four. I can handle like six clients max, and it's all retainer based every month, same thing in and out. So, yeah, it felt overwhelming and just too much for what I needed.
Yeah, our fractional GC folks are all on QuickBooks. Well, like I said, all our clients are on QuickBooks, and it works well for them. And they're solos; they have a high profit margin. They can afford it easily, but it is more than they need, and it is expensive for what it is. So it's honestly just a slap in the face. To Erica's point, I do like the solopreneur option. It will only take you so far though. So if you start
Yeah.
to, add employees, you start to want to see more in your reporting, track more. It's only good for so much. But I do like that stripped down. I don't know. Some accountants don't like it, but I've used it with clients in the past, and I thought it was honestly pretty helpful.
Yeah, my practice is pretty simple, and literally it's $20 a month. Like it's just, and it's on my phone and with the receipts and it's
Yeah.
really straightforward. And the invoicing, I don't love their credit card stuff, but their invoicing is really easy to match it up with when I get paid. So it's nice.
Thank you for sharing that, Erica.
Mhm.
Um, Aisha's question, Clio. So we are not Clio accounting experts, um, because we don't want to use accounting features that are inside of a platform. And Sarah, I don't think we've looked at Clio in several months for the accounting feature, have we?
We haven't.
Yeah, the last we looked at it, it was very limited. I mean, I think it's only been out for maybe a year and a half. Um, it's limited. So there may be some things it can do, but then I don't know that it will grow with you. Let me look on their website right now. Okay. And the last time we looked at it too, the pricing was just as high as QuickBooks. I'm like, now I'm talking out of both sides of my mouth. I complain about all the features in QuickBooks and how much noise it creates. But if it's going to have features that you might need, and it's the same price as Clio that's not going to have some features you might need, then I don't know. Let's see. Of course, I'm just trying to go there.
Apparently, there's a way to have Clio for accounting integrate with QuickBooks, but then obviously you're then paying for both, so it just adds the expense as well.
Let me talk about that too. So those are two different things. So Clio is a practice management platform. Maybe everybody knows that, but it's a practice management platform, and it, as of somewhat recently, does have an accounting module in it. Their thought is you don't need to go by QuickBooks, you don't need to go by Zero, you don't need to go by anything else. Just purchase our accounting module and stay here in Clio. They also, before that, had an integration with QuickBooks. And so, what that integration does, the primary thing that integration does, and a lot of these practice management, it's like Practice Panther will integrate with Clio. There's other ones that will too. Um, it will talk to QuickBooks and it will feed it invoices. And so, when you generate an invoice in Clio, not only does Clio hold it, but it also talks to QuickBooks and it records the invoice in QuickBooks so that when your client pays you, you can match that up in QuickBooks and you can see the activity happening inside QuickBooks, similar to how you would go to Clio and see it. There's also another integrate part of that integration with Clio is also hard costs. So, and I'm less familiar with that one, but I believe you can like tie your like advanced costs with your clients to the QuickBooks reporting and have that go back and forth. So you can pull client reports both in Clio and in QuickBooks. Not every integration is created equal. Some are really bad, and some of them will just mess up your QuickBooks file if you try to hook them up. Clio is not one of them. Clio is well known for being a good integration. And the clients that we have that do integrate their Clio and their QuickBooks do just fine with it. But you don't need to. We kind of feel like it's a bit duplicative because you already have all your invoicing, for instance, in Clio or wherever. Why do you also need to see it in QuickBooks? You really just need to see the deposits. But some clients want that, and so we just kind of, keep an eye on that integration and make sure it works. But that is different from actually Clio actually launching their own accounting platform module inside Clio itself. Um, what I would want to know is what is the pricing compared to QuickBooks? If it's about the same, I would use QuickBooks because they're just going to have more features. I would look at the features that are there. Certainly they get the revenue side of it right, assuming you're running all your invoicing through Clio. If you're running invoicing through some other platform as well, for whatever reason, that's probably going to be manual to capture if it will capture it all. Expenses, how does it do expenses? And not everything is a revenue and expense. There's a whole nother aspect to financials called the balance sheet. And how does Clio do with that? How does it do with its reconciliation? So I'd want to compare its primary features and see. So we don't have tons of experience with Clio accounting, but I would be hesitant to use it.
That's helpful. Thank you.
Yeah, you're so welcome. What about Quicken? Nope.
Mhm.
I'll say a little bit more. Actually, I haven't looked at Quicken in a long time. The last time I looked at Quicken, though, it didn't really do true accounting. But I know we have a few clients at least, not legal clients though, that might keep like their rental activity or something like that in a Quicken, especially if it's inexpensive or even free. I wouldn't be trying to run my firm off of it though. Sarah, any other thoughts on Quicken?
It's really just a personal financial software as opposed to a business. You're not going to get any kind of payroll or invoicing. Even the tax reports are really limited inside there. So it's definitely not something you can grow with.
I have a question
Yeah, go
okay.
for it.
Are there benefits to paying your taxes quarterly as opposed to less frequently? Or I don't even know if more frequently is possible, but I feel like I usually, before I started my business, just pay like a lump sum, but I don't know. I hire someone else to take care of that. But now that I'm starting a business or own a business now, I'm just curious if there are benefits to paying quarterly.
Yep, for sure. So the IRS and states will take your money every single day. So you can pay as frequently as you would like. The quarterly system, it's not quite quarters, it's April, June, September, and then January of the following year. So it's not exactly every 3 months, but they do call it quarterly estimates. And that is really to make up for not being on a schedule with an employer where they're pulling taxes out of your paycheck every pay period. So we recommend estimated tax payments generally, but we also recognize every client is a little bit different and can be different from year to year. So, if you have a practice where, like, we'll go back to fractional GC, if you have fractional GC practice and, your clients are paying you the same amount every month or roughly the same amount every month, probably getting on an estimated tax payment schedule makes sense because you have relatively predictable and even cash flow. But if you do wrongful death, and maybe it takes years to settle, and you're looking at a couple of lean years and then maybe one really big year, but you're not sure exactly when that's going to hit. That can be harder with estimated tax payments. Maybe you skip a payment. Maybe you're just setting aside in like a high yield savings account or money market in lieu of actually making that payment. Because if things tank, if you have a lot of expenses coming in and you're not selling cases quick enough, maybe you need that cash flow in the business, and you're not going to have that tax liability you think. So everybody is a little bit different, and everybody is a little bit different from year to year. But we do recommend folks at least be chasing after that tax number so they have an idea what it is. Saving towards it, even if you don't want to pay estimated tax payments, at least be setting aside for it. And then if you do want to make estimated tax payments, if you're like, I can't see a big bill in April, like I need to prepay some of this, or I feel good about cash flow, let's make a prepayment. Then it's deciding like exactly how much that is and when you should pay it. The Going back to the original point I was making about this sort of being a corollary for self-employed people that folks that get a W-2 have regular withholding. When you don't make your estimated tax payment, the IRS and states will assess what they call underpayment penalties. These aren't go to jail kind of penalties. These aren't call your attorney kind of penalties. They're just like interest on a loan. Because they're like, well, it was our money. You should have already paid it to us since you didn't. Okay, but we're going to charge you a little bit of interest. And so when you make estimates in advance, you are potentially negating entirely that underestimated tax payment penalty. So I don't know. Was that my,
Yeah, no, that's helpful.
yeah.
Thanks.
Okay, for sure. Um, who else?
I'm sorry, can I just clarify something?
Yeah,
I may have zoned out for a second and I got confused.
no worries.
Under what scenarios are you making those estimated payments? Like,
Sure.
yeah,
Presumably there's a profit in the practice.
right.
So, like for instance, if this is year one, you have a lot of costs to get everything launched, and maybe you didn't really open the door until December and you got one payment, right? Yeah, you might actually be at a loss for the year. Maybe you don't need to make an estimated tax payment. And I don't say that tongue in cheek. There could be a reason other than your practice that you might need to make an estimated tax payment. But just looking at the practice, you probably wouldn't. So the assumption is that your practice is profitable. So that would be one reason you're making an estimated tax payment. You don't have enough withholding. So some people actually have enough withholding covering their entire tax liability and don't need to make estimated tax payments. For example, we have some clients who they have their S corporation and they have their entire salary going to withholding. I don't see a lot of people wanting to do that, but they do it. They don't want to make estimated tax payments. They don't want to owe in April, and it has worked out for them. At some point, it won't work out for them anymore, but they're riding that wave as long as it lasts. And so they don't need to make estimated tax payments because it's coming out in the form of payroll. We see clients that have spouses and they file joint tax returns. Maybe their spouse's estimated tax payments or withholding are sufficient to cover the profit of the firm or the spouse's share of the profit from the firm if it's a multi-owner firm. So there could be scenarios where you aren't looking to make an estimated tax payment, but assuming those don't apply, really, once you're profitable, you're probably on some kind of estimated tax payment schedule. Did that help, Maggie?
Yes, got it. Thank you.
Yeah. Which I'll expand on that a little bit and say one thing that we do see with folks that are going into practice for the first time is like it comes to April and they're used to being overpaid and they're used to having a refund. And now, if you are overpaid, it's because of estimated tax payments, and that gets applied to the next year's estimated tax payments. So there no more refunds. With some exceptions, there's no more refunds, and that can be surprising to folks.
Shoot, I didn't know that. So even if I've been overpaying at 50%, I'm not going to get that back as a refund that's going to be applied in my next year's.
Okay. Courtney's an exception, y'all. So here's what we would do for Courtney, and we do this for probably a handful of clients every year. If you're overpaid enough that it makes sense to apply it to next year, then we leave your overpayment applied. If you're really, really overpaid, we might leave some applied and then we'll refund the difference. So you can actually choose both when you file your tax return. So if you're overpaid by $100,000, you could say, okay, well, I want 60,000 of this to go to next year's estimated tax payments, and I want the other 40,000 to be refunded to me. So you can absolutely make that choice when you file your tax return.
Okay, thank you.
Sorry, not trying to give anyone a heart attack here.
I have a new question, and it's a remedial question. So if you, because I've only been in practice for about 15 months, so if you are not big enough to need an S corp and payroll is sort of inefficient because you're solo or you may have one employee, like what is the smartest way to be paying yourself and the one or two people or the fraction of folks that you have on your team without incurring a bunch of additional administrative costs?
That's a great question, Aisha. Am I saying your name right? Is that Aisha?
It's Aisha. Thank you for asking.
Aisha. Okay, thank you. Um, Aisha, what state are you in?
DC.
Oh, okay. We have some clients in DC. Um, okay. So there's a couple that, oh, one more other question. So the folks that are working with you, Aisha, like what capacity? What do they do for you?
I probably will do I'd pay someone hourly to do some administrative assistant work at times. And then I've had one person come on as co-counsel on a very limited matter, but that's about it.
Okay.
So one, they're both contractors. I don't have any like W-2 employees.
Okay. Okay. Um, so if your structure is, I presume, like either like an LLC or just
Yep,
sole
that's right.
proprietor. Okay. Okay. Then I mean, my guess is probably whatever you're doing is working. Um, if you don't have anybody on payroll, you don't need any kind of payroll service. You give those folks a 1099 at the end of the year. Are they both here in the US?
Yes.
Okay. Okay. So yeah, you give them a 1099 in January for services performed, what you paid them for this year. And you can, there's tons of easy ways to do that online. So that's not an issue. Um, I would still keep some kind of books and records to keep up with all this. So maybe it's QuickBooks or something similar. Um, are you, what kind of how do you pay them right now? Do you like pay them through like a Venmo or
I just write them like I issue a check from my business account, and that's what they did. And then when I'm paying myself, I just transfer to my personal accounts. I just want to make sure that like it's super simple, and I assumed that that's what everyone else is doing, but figured I'd ask because we're on the call.
Yeah, no, this was a great question, Aisha. I would say, you if you wanted to, the only thing I'm hearing that you might do differently is pay them via like wire. Well, maybe not wire, maybe ACH, so they can avoid getting a paper check if they want that. Um, we pay some contractors directly from our bank that way, and it works out really well. It just makes things a little bit quicker on their end. But from your end, nothing would change. I mean, I feel like you're doing all the things.
All right, thank you.
Yeah, yeah, you're so welcome. Any burning tax questions? Brian's not here, so he's not gonna know.
Hey, council payments are deductible, right?
Of course, 100%.
I was just kind of kidding. I wanted to bring Brian back into the conversation.
That's actually a really good point, Erica, because sometimes folks have questions around what's deductible and what's not. Does anyone have any questions about items that may or may not be tax deductible? We're happy to address those.
And I will say the handout that you sent around did have some helpful tips on that. I was scrolling through that.
Thank you, Alicia. Yeah.
Yeah, if you can just kind of go into, you talked about um, being more careful around receipts for meals and travel. Um, and I feel like I kind of just use my credit card, statements for all of that. But should I like monthly be, kind of like tagging them in my credit card statement as to what was business, or like what do you kind of what do you recommend that is, a good protective set of, habits without just being overly like I'm not, printing them out and putting client names and da 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 da. So what is the right thing to do?
Yeah, for sure. So I think the easiest thing to do is to store them digitally. So, for instance, if you are booking travel, like for a conference, your hotel, your flight, just print to PDF a copy of the invoice and make sure that you're saving that wherever it is you store, Google Drive, SharePoint, wherever. If you're out and about, maybe you're taking a referral source to a meal or something like that, they'll give you a printed receipt. Just write on there who you're with and the business purpose. I was with, a former coworker talking about referring business back and forth. And then scan that, snap it with your phone app or however you scan it and put it in that same folder, and let that be that. That's what I would do. That's what
Okay.
we do. That's
Yeah.
what we
Okay.
actually do.
Thank
On
you.
this, on the scanning, I will offer, someone had to tell me this, maybe it's common knowledge for everyone else, but if you have Google Drive, if you have the Google Drive app on your phone, there's a scanning function there that will drop it directly into your Google Drive. So I just have a folder set up with my expenses, and if I'm at a restaurant or whatnot, I just PDF it immediately into my Google Drive and it drops right in real time.
Sweet. Sweet. Thank you. Tracy, was that you that just spoke? Or are you ready to speak?
That was me. Yes, thank
Oh,
you.
okay. Okay. Any other questions about deductions, cash flow, tax filings, tax returns, anything like that?
Do you all have a standard rate that you charge for your tax returns?
Good question.
Or how
Good
does
question. We do have minimum fees, but we don't have anything like flat for all clients. Our minimum annual fee is 3,000, and that covers tax strategy and tax return preparation. Um, but then we have some clients that are paying, many, many multiples, just depending on the complexity of their needs.
got it? And then for I don't even know how to formulate this question. I know that you can put into your like self-employed 401k kind of concept, whatever that thing is, that's a function of the amount of profit that you've made or
Yep, yep.
taxable income that you've had. Do you know that off the top of your head what that percentage is by any chance?
Oh, we
Or
do.
like or how that
Yeah.
works?
Yeah, yeah. That's actually a great topic, Eric. I'm glad you brought it up. Let's talk about retirement plans. Um, we like retirement plans for a few reasons. One is when you do what y'all do for a living, what we do for a living, where you're trading what's in your head for money, you don't usually have tons of deductions. All the expensive pieces of it were behind you in college and things like that. So um, there's not a ton of deductions out there if you're looking to try to reduce your tax liability. But contributing to a retirement plan can be one of them. And you're essentially paying yourself, your future self. And right now, I'm just talking about like if you don't have a team, if you have employees, that's a whole nother conversation. But let's just assume it's you. It's nice to be able to give yourself another tax deduction just by paying yourself in the future. So it's a really nice tax benefit now. And of course, we love to hear people are saving for the future. Um, and the opportunities to set up retirement plans for small business owners are more favorable than they are when you're an employee. You really have a 401k. When you're an employee, your employer may or may not match. But when it's you, your options open up a little bit. They're not infinite, there's still only so many, but they are a little bit sweeter. The one that we like the most is called a solo 401k. You might also hear it called an individual 401k. You can't have any employees. So if you're running a solo practice and you don't have any employees, that's good. You can employ your spouse. So like if you're both attorneys and you're practicing together, you could still set up a solo 401k. or maybe they do your admin or something like that. That's fine. But otherwise, no employees. And with the solo 401k, you have two components of how you can contribute to your plan. So it's like you're an employee, like you used to be, and you can put in the max. This year it's like 23,500. Changes every year, and then there's a catch up if you're over 50. Think that's right, 50 or over actually. So that's pretty sweet. So you can put that in. Then there's another piece of it that you don't get when you're just an employee at a big firm, and that's the match. And that is calculated as 25% of your salary. So if you give yourself, let's say 100, and that assumes you're an S corporation. Let me talk about that. And let me talk about what if you're not an S corporation. But if you're an S corporation, then you have, let's say, $100,000 a year salary. Then you could put on top of, say, the 23,500, you could put another 25,000 into your solo 401k for the year. So it's pretty nice. If you're not an S corporation, if you have a single member LLC, you have a sole proprietorship, then you have to look at the profit of the firm for the year, and it's roughly 20% of the profit. The percentages are different just because of the way self-employment taxes factor into all that. So, if your profit was 100,000 for the year, then your contribution max would be 20,000 for the year, plus the 23.5. So we really like these solo 401k plans. You could also do what's called a SEP IRA. Self-employed pension and individual retirement account is what it stands for. And it's similar to the solo 401k. You just don't get the employee piece. You don't get the 23.5, but you get the 25% of salary or 20% of profit. So the contribution is potentially limited, but it runs very similarly otherwise. And we like that as kind of like a backup to the solo 401k, because again, you can't have any employees for a solo 401k, and you might have like one or two people, like, maybe a staff attorney or, a paralegal or something like that. So a SEP might work a little bit better. I can say a lot more, but those are the two that we see the most, and we really like. We actually help clients set those up and run those as well. And that's very nerdy, but it's really fun. It's really fun.
So I'm sorry, can I just make sure, because I think last year I did a SEP IRA when I actually should have been doing a solo 401k. So what are the maximums for the SEP IRA? Is that just the 20% of the profit thing, but not the 23.5? Okay.
Bingo.
All right. That's helpful. Thank you.
Also, this is really important. By and large, once the year is over, once we hit December 31st, if you didn't buy it this year, if you didn't pay for it this year, it's not going to be a deduction on your 2025 tax return. That's not true for retirement plan contributions. They're the one exception. Unless you're a accrual basis taxpayer, that's a whole other discussion. But we're assuming we're all cash basis taxpayers. You have until quite a bit into the following year to make your SEP IRA contribution or your solo 401k match employer piece. You have until, honestly, if you extend your tax returns into next fall. And so you can make that contribution. The cash can leave and go to your plan next summer, whenever, but it counts as a deduction for this year. So a lot of people will, especially if cash flow is a little uncertain, but they want to get that deduction, but they need to set aside for it or something like that. They'll wait and make that contribution later in the year. Some of it is for practical purposes, because especially if you're calculating your match on profit, and like in a SEP IRA, you may not know that until March or April when your books are done. So that's why you have a little bit of extra time. These are all great questions. Oh, we're almost at the hour. Is there any other questions or concerns or feedback or anything before we wrap up?
This was really helpful. Thank you.
Oh, you're so welcome, Erica.
Yes, super helpful. Really, really appreciate all the information.
Yeah, I'll co-sign that.
Oh, y'all are so welcome. And y'all have our contact information somehow. Brian can get it to you. You can just email us with questions. Like, there's a lot of things we could answer for you outside of a CPA client relationship. And if we can, we're delighted to. And obviously, if you want to work with us, absolutely reach out to us. But we're here as a resource for anybody at Hay Council if we can help in any way. So don't hesitate. Oh, thank you, Sarah. Yeah, last call. Oh, y'all, thank you so much for spending your Friday with us. We really, really appreciate it. A safe and happy weekend to everybody, and happy holidays and happy new year.
Thanks.
Thank
Thank
y'all.
you.
Thanks all.
Bye.
You.
Bye.
Bye, y'all.